appreciate that.
Sorry.
All right. Oh man, Joe. Hi. All right, let's jump in. So we did a little NFT right here, but all right. So right now, near. Let's just say, hey, we're starting a new show.
Yeah.
We're doing. Look at it. We're doing video. Here's what it looks like.
Yeah, right. It's...
All right, so welcome to Ready Layer One, everybody. We are a podcast now, possibly video, that is all things the near ecosystem.
Yeah.
Right. Yeah.
Yep.
That's what we're doing. And we really thought about this title a lot. And Joe, what is the title?
This is our new weekly rundown called Who Sharded? We just we're going with a play on words of the near is a sharded blockchain, and so we want to know who sharded this week.
And Joe, you saying it out loud was even funnier than I was hoping it would be. And so
Yeah.
This is either going to be the greatest title or the
Yep.
worst. But I think that like that line is so similar that I think we just ride this out.
Well, I mean, it's perfect for this market, right? So might as well just write it down. So.
Why would this market need any fun? What's going? I'm feeling great.
Right.
You know,
Right.
what's near is that $3.15. It touched into the twos last night.
Yeah.
That was.
So yeah,
I didn't think I'd see that ever again.
Dipped his toes in the water, so it's nice.
Yeah, it's like, hey, I remember here. I remember a year ago when nothing was on the chain and we were trading for this. So that's good. So yeah, as everyone knows, we're in quite a pullback in the whole entire crypto market. But also, I'd be more worried if like the whole world wasn't in like a pullback. Like,
right.
You know what? Netflix is down like 65%. If Netflix was up 50% and this was in crypto, I'd be pretty worried.
Sure. Yeah, and everything's a mess, so I think we're all right.
Yeah, exactly, man. So we're gonna do a weekly rundown and bring people up to it. So let's just jump right in. I think that one of the like most important stories that happened this week, for at least me being a US person, is Binance US.
Yep.
Finally did the you can buy Near on it with the actual Near token. Because at first, and maybe you can explain to me, but you could buy Near, but it was an ERC20 or like a like it was a different kind of token that wasn't actually a Near token.
Yeah, it was like a version of like wrapped Near, essentially. Right. So that, you know, anytime something is like called wrapped, whatever, it's just essentially it's acting as like a symbol for that particular token. And so that's what they were doing, is that they had a version of that. And so that's why when it wasn't really, you could trade on it, but it wasn't actually proper Near. So now Binance US is actually on supporting mainnet. So when you are trading, you know, for the buying or selling, you were actually using actual Near tokens.
All right, that's good, because a lot of people are like, hey, how do I buy Near? And I'm like, it's not easy. It's not like super straightforward yet in the US.
Yeah.
And I wonder why that is. You know what I mean? Like, it's not on Coinbase. Like, if it's not on like Coinbase or Gemini, most people don't even want to like buy it.
Yeah.
That I talked to.
I mean, there were some technical things that were there, and then there's also just, I think, you know, again, Near has been very conscious about working to get onto different exchanges, you know, because it does affect the market. It does affect what's happening on chain, and so, you know, I just they are clearly in no rush for some of this stuff, and they're worried about other things. So, but this is good news, though.
Exactly. And you said something there that I think is that I like about the whole Near ecosystem. There's no rush, right?
Mm-hmm.
Like, we're watching right now this pullback in the market, and I think a lot of it, or at least some of it, is from people sort of rushing, kind of over leveraging, doing some pretty heavy degen trades on systems that aren't quite ironed out perfectly yet. So take your time. I am okay for a 5-year build out. I don't want, you know.
Yeah, exactly.
Awesome. What happened? What is some news that you saw this week?
I mean, big stuff, you know, that I think is really tangible for everybody is we actually have another marketplace going live for NFTs in the Near ecosystem. Apollo42 went live this week after a little bit of a delay. They're supposed to launch a couple weeks ago, and now they went live. It's, you know, it's a net positive anytime you have competition. You know, like we interviewed Few and Far. They're launching soon. And so the more, you know, that there's out there is good. There's just going to be some challenges, right? Of like how users approach this stuff. Like Apollo's big thing, one is like it's a different user interface than Paris, whatever you want to call it. And so some people might like it, some people still might not like it. I mean, just because it's different doesn't mean it's better. But I think some people are looking for a change. And then the other part of it, they have like a little bit of a social component, so you can actually kind of make comments on things, and that could get dicey. But
Yeah.
it's interesting. I mean, they're trying something new, right? And so it'll be interesting to see what happens. I think you've talked about before in previous episodes, the concern of the user adoption, and so we'll have to see what that looks like.
Yeah. Yeah, that is something that I look for because it is really there's not a massive amount of volume on Near right now. And I think that's going to be growing. I like so my thought with like volume of people, right? And I think about it sometimes like crypto over the last few years has had these like runs, right? Like you had Ethereum run in sort of the ICO boom, right? And then
Mm-hmm.
I think you had that Binance run where they had all those like kind of coins and they did that run during that sort of release. And then you have Solana really hit the NFT rhythm and maybe DeFi
Yeah.
a bit, right? And I think Near has done all that really well. It's just like the market doesn't repeat itself, right? Like once
Right.
the edge is taken away, the market then will adapt, at least a decentralized market, and that's what we're all hoping for. I mean, centralized can be manipulated differently, so can decentralized.
Sure.
But and so I think Near, in a kind of a lucky way of where it's positioning, it's not the first one to market in any of those, so it doesn't take the like extreme volume
Mm-hmm.
and pressure testing that we're currently seeing with Solana right now. Today, something's going down with like some
Right.
possible liquidations and things. So I think Near's run though could be GameFi because you
Mm-hmm.
need a network that's like fast, consistent, doesn't go down a lot. Like I think that could be its run. We'll see though. And that that'll
Yeah.
bring users to it. There needs to be a thing that's like unique to it to be used. Or maybe Near just keeps chugging along and 5 years from now we're like, whoa, there it is. There's the juggernaut. Which I'd be
Yeah.
okay with.
Yeah. Absolutely.
Yeah. And the market is really bad right now. And but there's still people investing and making moves. Like that's the thing too. Like Near has got a massive war chest. They're not like going bankrupt tomorrow. At least not
No.
anything I'm seeing. And there's still investments going on there. And one investment that happened this week, which I found to be an odd, was Near Treasury just raised some
Mm-hmm.
money. So Near Treasury, we'll link up to all these things, but Near Treasury
Mm-hmm.
is basically a DeFi exchange that just raised like $2.5 million at a $47 million valuation, roughly. Those are all close
Mm-hmm.
estimates. So there's still investment happening on the Near ecosystem. And then
Mm-hmm.
I actually dove in pretty deep to this Near Treasury light paper. And there's a
Yeah.
couple interesting things, like just timing, right? Like life is sometimes just so much about timing. First off, they're basically launching so Celsius is like in this huge collapse right now. This
Right.
is and to launch a DeFi version that has similar words and buzzwords and approaches is very interesting. But
Yeah.
going deeper into it, you're right, like that wouldn't be it's like
Yeah.
Celsius is crumbling. You're like, we're the DeFi version of that.
Right. Right.
Obviously there's nuances and it's different, but a couple awesome. Okay, so a couple things about it. So it had a couple things that I would not that it's got the savings protocol and it's got a stable asset. It's got like 2 levels, which I think is so interesting. It's got like a stable asset saving protocol and a volatile asset saving protocol,
Mm-hmm.
which I would rebrand volatile. Just like
Right.
it's like basically it's got like safety and degen. Like it's got like 2. I wonder if it's just gonna be a switch that toggles. Like you switch one and it's like, hey, you're here
It's
for
actually
just
not a
like
bad idea. Right.
and
Yeah.
then you switch
Yeah.
it the other way and then like it turns into like flames in the background and just like you know
Right.
just gets like
Right. Right.
super intense. It's like you're
Just so
about to
you
hit the
know.
degen mode.
Right.
It's just like AVB and Matt Lockyer in there running loops or looping. But all right, so a couple things. It's going to launch, and I've got notes, so I'm not going to be looking directly into the camera for this. But like, all right, so the savings protocol looks like it's starting where you can deposit wrapped Bitcoin, wrapped Near, and USDC. And the deposits on the protocol are utilized in diversification among liquid passive income. They also use the word schemes, which is also a word I would toss out. Yield farms, staking mechanisms, as well as arbitrage trades. So this is all very DeFi stuff, right?
Yeah. Yeah.
But they do a couple little tweaks. So deposits in the protocol can be claimed by depositors every day, which is interesting because I think a lot of the Terra stuff, people had to like have it locked for so long that once things
Yeah.
turn, they couldn't get it out anyway. So that's
Yeah.
interesting. And I think that's not a bad thing to sort of be able to be like, okay, this is turning to have that ability. Then they're gonna have a governance DAO, which another episode we'll talk about DAOs and governance tokens. I don't want to get
Sure.
into that right now. I think it's like we should find someone who's like a DAO expert and really fire some like questions off at them that we have, like, because DAOs are going to be great in a few years, but just currently in their space, I just don't know.
Sure.
There's too much room for like manipulation. There's 2 features. There's 6 main features on their light paper. I suggest people go look at a light paper and just run through it to see if it isn't even something you want to play in, right? Like, but 2 things that stick out is that it's no impermanent loss, which I want like a course on, because that's like the biggest issue with liquidity pools with me, is that you see like a really high APY, and then you go like, say you go near versus any token. Almost every time that any token is going to lose value against near, and then even with the high APY, you still lose a bunch of money. So I'll be curious, like, is it single side staking? I don't know. We'll have to see.
Yeah, definitely.
And then they have a rewards, right? Like, and then they have a rewards plus program, which is kind of like terms. It's like if you stake longer, if you leave your stuff in longer, which I would be hesitant to do since of the Terra Luna thing. It's like being able to get out of something, even if at a big loss, is better than not being able to get out of it to a total loss.
Right. I mean, I guess that would be my question. Just trying to dig deeper into of like if they're not locking things in some form, I mean, how are they protecting liquidity? I guess if it's truly DeFi, if they're, if you need to actually have a pool available, how are they structuring those? How are they setting that up? It's interesting. It certainly sounds interesting. Sounds like there's a lot of challenges though, but it could be good.
Yeah, I think so. And I think for you and I, we should find someone in the community who's really into investing and just go through a white paper with them, because I think reading these things, you really try to pick up on certain key points. Like, for instance, I watched the total token fixed supply, like how the tokens are allocated.
Mm-hmm.
And 16% are given to the team, advisors, and investors, which isn't a huge amount, but it's not a small amount either. So, and they have like a 4-month cliff with a 36-month, I think, vesting schedule. Those are all just like important things.
Yeah. And and I think we've talked about this kind of before, but that's where some of this stuff is always interesting, where we're in a kind of whole different world with some of these projects where, if that is their sole compensation, then they're like, oh, okay, I get it. Like, so that runway of like $2.5 million is a lot longer because this is how you're compensating people, because you're not paying salaries, you're not paying full salary, maybe paying like partial salaries, right? And so like there's some of that stuff, and that stuff goes on in the startup world and Web 2 with like stock options and everything else. But like this stuff is a little bit different, of just because like stock options are only really worthwhile if the company eventually IPOs, where this is like, as long as you're still around, eventually those tokens will unlock, and so yes, the value can still change, but you're not necessarily waiting for an IPO event. So there is different incentives for people working and everything else. And then when you hear, hey, I raised $2.5 million, like that runway could be very different. Like that could mean that your runway is 6 months. It could mean that your runway is 2 years, which in any technology space, especially crypto, are 2 very wildly different timelines. Yeah. So there's definitely a lot more to learn and dig into.
Yeah, absolutely. I mean, from what I saw, so it does the thing too where they do like the you know how Metapool does like staked near and it's ST and then near after it, and then you can use the stake near as like liquidity while still earning your validator staking rewards. It kind of seems like they might be doing a similar thing where they, you basically you put in your token, you deposit your token, and you get the NT asset version back. But then I was like thinking about like, so say you put in a wrapped near, you'll get an NTW near. So it's like all these tokens are going to just be like so many letters till it just starts getting a little complex even for me, where I start like not quite understanding everything.
Sure. But then I think for launching a project, I mean, I would rather do something like this now where volume might be a little bit lower. You can get a better sense of, you almost get like a bonus pilot in it, right? Yeah, you can launch like, on testnet, you can launch a beta, you can do these different things, but like you almost get like an extended window of that because things are not
Yeah.
taking off right now, and you're not in some kind of crazy bull run where volume might be through the roof, and if something goes sideways, then like it's going to cause massive problems. You might be able to catch things easier. So it takes a little bit of pressure off of a launch. So I don't think it's such a bad thing to do some of this stuff right now.
Agree, man. And I really hope, like, through this last few weeks, that a lot of these companies or projects really start to like I was like, not I was like, people didn't want to hear, but like a few months ago, I was like, there's nothing wrong with putting your money in a validator and sitting on it, right? Like, there's not, we don't
Sure.
need to be degenning. And when a bull run, Near's doing great. Everyone's like, no, I want to like loop it and borrow against it and then restate. And it's like, okay, but if things turn, which they do, you get liquidated. And now I think that's happened to a lot of people.
Yep.
And then I wish it could be even like game played out a little further where it wouldn't have been that much better anyway, had they just held consistently with a validator or something safe like that. All right. Well, and then what else we got going on here? Okay, Joe, you posted something that I would like you to help explain. Is like, okay, so Near and JavaScript, you're a dev. What is like the
Yep.
significance of that whole story?
Yeah. So so now it's about 2 weeks ago now, they announced that they're going to have a new smart contract being able to be built in JavaScript directly. So right now, Near smart contracts are written in Rust and assembly script. Assembly script, if you are a JavaScript developer, there is a lot of similarities, and so that is an interesting transition you can make. Like, you can pick it up a little faster. Rust, while it's a great language, and people, once you learn it, really enjoy developing in it, there is a bit of a learning curve. Like, it just, there is a steepness to it where there's just some nuances that you just have to get used to, but it's a really great language. But people don't always want to go that route, and that takes time, that takes effort, and everything else. JavaScript, though, is probably one of the most popular, if not the most popular language right now in the developer market. If you go to sites like Stack Overflow, I mean, JavaScript is usually number one, number two, like, top reported languages being used, in production. It's everywhere. It has a really low barrier to entry because it's used for really simple things on basic front end websites to, more complex, server code now with Node and everything else. So what this does is it opens up the window for developers to really start to come on to Near and write things that are smart contract based. Because if you know JavaScript, you can now start doing this. That's huge. The second piece of it that's really interesting is that it gives you an opportunity to also prototype things essentially a little bit faster as well. So what they've done, from what it looks like right now with the JavaScript, is, and again, it's not full featured. So this is, again, early stages. You can't do everything you can do like in Rust, but you can at least start building out some basic smart contracts. And so if you're trying to get an MVP out the door, to get somebody who is a JavaScript developer to read through the documentation and build something that's probably at least usable for an MVP, or at least enough for you to kind of do a proof of concept, that's huge, because Rust developers are hard to find right now. They're in demand. It can be very expensive. And so the access to getting a project right now, again, it changes everything. Two, you've seen where I think user adoption in any type of product really comes in is the more uh, devs of different levels can come in and feel competent, that's huge. And so, again, JavaScript really lets you do that because, again, there's so many people who know it and are comfortable with it. And if you don't know JavaScript, you can probably pick it up pretty quickly if you're already a programmer because, again, it's a really straightforward language.
So you were saying there's some mints that happens to me because with NFTs, that people are still projects still moving forward. Some people held their mints. Some people kept
Yep.
going forward with them. What did you see in the NFT market?
Yeah, there's definitely been some delays. Three that were kind of on people's radars were Rocket Boys, Anonymous Fox, and Near Robotics. And, three very different projects, and three projects that I think there were some appetite for all of them. Near Robotics, is one It looks a little bit like a Tire Robotics from Solana derivative. Looks like Transformer guys. Really simple roadmap right now. The standard. Here's a DAO. Here's we're gonna stake. We're gonna do this. Um, more of a community type of play right now. They cut supply. So nothing that really excited me overly too much, but there definitely was enough where I think they sold about 1,400. So I mean, there is some activity, but Anonymous Fox is really interesting to me because that's a cross chain one. So they're doing something where it's near an Ethereum, and this was their Gen, I guess to call it like maybe their Gen Zero, where it was only 220 here on near, and then this gives you whitelist to their Ethereum project when they do their Ethereum NFT, and it's clever lore about like these foxes that are hacking in and stuff like that, and good community, and it's gonna, to me, what's really interesting is the cross chain piece of it, of just how they look to pull it off. There's a few of these projects that are popping up now, so that's interesting. And then Rocket Boys. Rocket Boys, is a developer heavy project. They released their Vulcan whitelist app, and it's very similar to what's on Solana right now. And that's a really nice tool, something that's really been missing from the Near ecosystem, having that whitelist collection tool that looks like that behaves that way. uh this goes into, though, and they're also building something around the healthcare industry too. It hasn't really been full details announced, but so they're building, and like part of their roadmap is they always plan to have multiple projects in play as they're going, and they're using their funds to hire more developers, and it's really a build first type of thing. To me, though, I mean, like we've talked about before, is just really the value of these is really around. uh, I think if it's not even about necessarily using these things, because like the whitelist thing, like if you're not running a project, like it's not about having an NFT to use that. It's more or less, being part of that. Will there be some kind of return? Will there be a token down the road? And then also too, the Rocket Boys one also is a little bit more interesting because they're doing two other components with it. One is a metaverse piece of it. So, Rocket Boys, your NFT is actually a metaverse ready, like I guess PFP avatar essentially, right? So you can actually use that in their metaverse that they're building. They're building essentially a NFT display room type of thing. You can see preview of it on their website, and so you can actually go in, and depending on like the NFT that you buy, you get a certain size room based off of the rarity and things like that. And so, I mean, there's some interesting pieces there. They're certainly trying to do different things with it. But yeah, I mean, those are kind of the three that really kind of stood out, I think, for the near market this week.
That was a really good recap, Joe, of the NFTs this week. And I think I want to bring up with you just right now, like I've really been thinking about NFTs lately. And I want to preface this to everybody. I am a huge NFT fan, and I have lots of NFTs, and I support lots of projects. I'm starting to see, like, right now the market's down. I'm not worried about that at all. The NFT, I'm feeling like that is very 2018. I'm getting some major vibes from then, from that
Sure.
era to there. And here's why.
Mm-hmm.
I think there's a fundamental issue with NFTs in their current form, and it is the sort of flipping secondary market aspect of them, right? So, for example, Rocket Boys, huge fan.
Yep.
Great, they're building a lot of stuff. After the mint happens, something happens. From what I'm seeing, is like two things develop. Then at that point, there's the mint money goes to the project, and Rocket Boys starts developing. Then the NFT gets created, and it becomes sort of this like it now lives separately from the project and goes into this sort of like speculative world of gambling. Like, I don't even want to say gambling, like just people flipping out NFTs, which I've got nothing against, and all that kind of stuff.
Yep.
But the problem that I think a fundamental problem that needs to get figured out is like, then the value of the NFT is now not correlated with the project quality and the project, right? So like,
Sure.
why hold an NFT if I can't get any rewards back or anything, just to be part of a community. Cool. I get that. That's fine. Do that for a couple. But I mean, if this is going to be a sustainable sort of system in launching projects, I think it needs to shift, because otherwise it's just a bunch of GoFundMes, which I'm not even against if you're front with it and like, hey, this is a GoFundMe, you're helping build on the system. Hey, I've got nothing against that.
Yeah. Sure.
It happens either that, or it turns into, and people use the Ponzi word negatively. I'm just saying, like, in that structure, which is the next person will buy it for more than I own it.
Sure.
That's happening too. No matter it's not that the project is that, it's that the NFT system is turning into that. Does that make sense?
Yeah.
Like, it does. What are your thoughts on that, Joe? Because I feel like, and I don't want to create FUD. I'm still definitely like, I'm just trying to think of like,
no,
what happens.
I get. No, I think these are important points, right? So we're at the next phase. If you've been around, not just near, right, but just around the crypto ecosystem with NFTs for a little while now, you've seen a few different shifts. And this next shift here, seems to be across most chains, if not all, is this push towards utility tied in to the NFT. And I think that's caused some, real disconnects for how people are evaluating an NFT project. Because what starts to happen is one of two things. Either people get really hyped about something because they say, oh, look at all the stuff this project is building. They're going to do this, they're going to do that. And so I want to buy in, whatever else. But it doesn't, just because they're building all this stuff doesn't mean they're returning value back to you. So then when you see, oh, why aren't I getting X number over my original price? Well, now you get upset, you FUD the project, and now maybe you collapse that, right? And so it can go both ways. Where the other side of it too is that there are ones that are way overpriced. And you say, well, how am I going to ever get this money back because they're not doing anything? Well, that falls back into you shouldn't be expecting utility for everything. Some things are simply just baseball cards, right? And it goes back to that thing of like, whether you collect comics, baseball cards, Magic, Pokemon, whatever it might be, those things have value because of rarity and because of speculation and because people are willing to pay X amount for that. And whether they want it because it's completing a collection or they think it's valuable or whatever it is. And so that's okay. And that's going to be a natural part of the digital world becoming more of ours. So I get it. Like there are rarity and things like that make sense. But the utility piece, I think, is causing everybody to really have a disconnect of what the expectation is. Because if you're buying NFTs to earn passive income, well, unless you're getting it at mint price and they have a clear roadmap of how they're returning that back to you, then it's not happening. There's no way you're getting off of secondary and getting proper passive income that makes it worthwhile, unless maybe like a casino play. But even then, I mean, you can make that argument that not necessarily. Like, they'd have to really have a ton of volume to be worth it. So that to me, I think, is the biggest disconnect. It's not that, and I think you're right. It's like, it's not about that there's anything wrong with raising money through an NFT to build out a bigger project. It's just that, like, the secondary buyers need to understand what they're really buying at that point, not necessarily just, hey, I have access to X, Y, and Z.
Exactly. And I'm with you. The baseball card analogy totally makes sense. I get it. But there are, in theory, like, NFTs are so powerful. Like, they could be used to, like, businesses could give NFTs to employees in order to have them have a stake in the success of the company, right? Like, this is like my future hope, right? Like, you've got like a DAO, you've got NFTs, and you've got community. You could create super fans. And you know who's like doing like what I think are NFTs? There's a couple of hip hop artists that are like, so like, they're leveraging NFTs. Like, I think I sent you a video on TikTok that I don't remember his name, but he's making his songs NFTs, so the streams that they get goes back to the people with NFTs. That is like, okay, now we're talking, right? Like, this is where I'm hoping NFTs go. And then it's like, I agree with you. There's going to be a space that's just baseball cards. But that's a finite, that's like not like, that might be an okay space, but I just see it currently as a lot of baseball cards.
Yeah.
And it needs, and that's why also I'm waiting for GameFi. I can see gaming and NFTs. I mean, talk about a match made, right? Like, so good.
100%. Yeah. Yeah.
Yeah.
No,
So
I mean, games are perfect. I mean, but I love the example though of the musician, right? Like the musician one is, or even just a regular artist, because that's where all of these pieces that we're talking about actually can connect and make sense. It's
yeah,
the idea of the old school fan club, right? Where, you used to be able to spend X amount of money a year to have a subscription kind of thing to a fan club, to a band, and you would get maybe some merch, maybe easier access to buy tickets, maybe you got a free thing, or you got to know about the secret show, or whatever it might be. And so you're paying, and so that help fund the band, right? Now here, like the example of, whether it's a rapper or whomever, that is say, okay, by you buying my NFT, it gives me money. I can go use a recording studio, which costs a lot of money. I can distribute my music, which costs money. And now I'm going to give you some money back based off of my streams. But you are now not only going to get passive income maybe off of that, you have a vested interest because you are assumingly that you bought this, you're my fan. So
yeah,
you're going to come to my shows. You're going to tell other people about it because the more successful I become, you get something. And you're going to spread the thing because you are actually a fan of mine that is not necessarily just about a vested interest. Right. And so those are the things that become much more interesting than just like, oh, I get returns from somebody using your software, because that's a pure business play. I might as well buy stocks, right? I'm buying stocks at that point because I'm just waiting to try to get a dividend, right? That's the same idea there. But when I am your supporter that has not only just a monetarily interest into you, but also, I like your work and I want to see you succeed and I want to make sure you can keep making music. Well, this is the way to do that. And I'm guessing by doing this, it's going to help cut out a lot of middleman type of stuff. And so maybe
yes,
down the road, the artist is going to be more successful, who maybe doesn't have to now go charge $200 for a concert ticket, because now there's no, because they were limiting some of those middlemen, where now maybe I can actually go see my favorite artist and not have to pay through the nose just to get tickets. I'm not saying it's going to happen, but I think those are the possible paths you start to get to when you start to remove those middlemen and go directly to fans for that stuff.
exactly. And like with your musician style, so okay, you're an early stage NFT holder. This musician's now playing out arenas. The musician can see who has that NFT and could airdrop free tickets to like a
Yeah,
Gen Zero of NFT holders who've been with you for 5 years. Like this is where I'm
100%.
like hoping NFTs go, but right now it's not. It doesn't seem that way in a lot of the spaces. I mean, I'm sure there's certain groups that are thinking about this and doing it, but man, it's getting. I haven't seen a whole lot lately, and I'm really waiting for that. I think it's
Yeah.
gonna be awesome. It's just so
Yeah.
much bigger than it is right now.
You're starting to see a little bit like you're starting to see like some film stuff, like people trying to raise money for films and things like that. But like again, like all of that stuff is super complicated, and like it becomes again a GoFundMe, right? Of like, so like it just, the way that people have to start to iterate and think about it is again of like, what am I really getting back in return, and can I make this something else? Because if you have to raise money for a film, like we know, like, I mean, we're talking millions of dollars you need to raise. Even like a low budget film is still a couple $1 million. And so you're not, to get that off an NFT raise is really difficult. And then what are you going to really return back? Because, most movies do not make money after marketing unless they're really a big movie. And so like this is one of those things that's like, okay, it's really cool that you're building your passion project and I'm helping you fund it. But, when people start to expect something back, that's why the fan club thing, almost of that style of, hey, you're helping me do something that's a little bit more realistic, right? That I can get to. I don't need millions of dollars to do this. And I now know you as a fan that can continue to promote me over time and have
Yeah,
this more vested interest. Like that's really, really an interesting next phase for NFTs.
totally. It's like an anonymous email list. Like I love that about like think of like the power of that when you can like so I think a long time ago we had this in a podcast and I just went off on a rant about like everything. A lot of companies are just trying to get users, people to use
Mm-hmm.
their software, people to use their platforms. And so the value and why are people paid so much who have big fan bases? Because they bring in users. but there's never been a way to like value the user, right? The user never gets any money from their collective value. The singular person or the company gets all that value, right? And I think NFTs have the ability to now give people, you can now value people, right? Like, yeah, buying stock is one thing, totally get you. Like, there's going to come a point, hopefully, in this like decentralized Web3 space where a major players start to emerge from NFTs, hopefully, right? Like, say Rocket Boys create their metaverse, it blows up, and now there's like a big metaverse, massive users, lots of profit coming in on that, however they decide. If you were an NFT holder from this original Rocket Boys launch of 2000, is that going to help you? Are you going to get to be part of that? Or did you just crowdfund it? You get to cool avatar and that's it, which might be fine as long as it's like upfront that way. That's not the worst part. But to me, I think creating that super fan, rewarding that super fan, and basically decentralizing the profits is like, I think the really cool thing that can be done with NFTs. But maybe that's not going to happen. I don't know.
No, I mean, but it's the possibilities are there, and like that, I think you're spot on. Of like, here's probably the next iteration of what starts to happen, because we've been through a couple of phases here, and you're right. I think people are going to get burnt out on the utility piece because they're going to get frustrated of like, why am I continuing to, buy into something that I'm expecting a return for? Now, again, if you jump in because it's truly a community PFP project and you just like the speculation of it and you like the community of it, and that floor price keeps going up, that's fine. But it's the same again as any other trading aspect, that like baseball cards can collapse and everything else, like they've gone through cycles. It's not guaranteed to keep going up in value. Art does the same thing, right? Art can shoot up and drop back down. And so as long as you are clear about that, that's fine. People are getting, I think, again, they're getting a little bit twisted about like, oh, because there's a utility, this project should be doing X, Y, and Z, but that's not how that works.
Yeah, exactly. And I'm basically at the point where I've got my baseball cards now of NFTs. I've got a lot of baseball cards. And I just am like starting to look, and this is what I love about a pullback. It really starts to sort of clear out the maybe the little fluff that was happening, right? Like a little bit of the it's like, okay, so now why do you want me to buy your NFT? And it's not even a lot of money. 12 near, 10 near, it's not a ton of money. But the fact that when I look this out over a year or two, you don't even get that little bit of money near back, then it's a GoFundMe, right? If something costs you 12 near, and then a year from now you don't have something worth 12 near back, you did a GoFundMe. And then there's nothing wrong with that. It's just I want people to be aware
of what that was. Yeah,
exactly. And then some of these in secondary market get way high, and it's just like,
absolutely.
Unless you want to be part of the community, which I get totally.
Absolutely.
I'll be at NFT NYC or NYC NFT. I'll be there. I'm not going to go up to every project and say this to them, but it's important to discuss these things, though. It's important to pressure test things.
Absolutely.
Imagine if you thought, say you invested in the early stage of Amazon's with an NFT, and now Amazon's worth $1 trillion, and your NFT is now worth nothing. But like you thought that you could be part of that journey with them. It'd be kind of crappy.
Exactly.
That's all. Oh man, Joe, this is why our first video of Who Sharded is just going deep into NFTs, which I think is important. So I'm still minting them though. I'm still getting a few. Nice. Because I genuinely want the Near ecosystem to grow and build. So
yeah, absolutely.
I'm GoFunding a lot.
Yeah.
So anything else going on this week that we want to like touch base on?
The last thing I wanted to just bring up, this has actually been around for a few weeks, but it's kind of reared its head again. I think it's important to be aware of. So there is actually a proposal on the Near Governance Forum about reducing the gas floor price on the Near network. And so this is a really interesting one where I think the assumption always is right now, like, oh, it's so low, right? I mean, it is low comparably. It's very, very low. But there is actually a floor to it. And the idea here is that it should be reduced even further. And what that would do is actually, there's a lot of opportunities there where it might improve some of the DeFi aspect. It might help encourage people who are doing more high frequency arbitrage type of plays, right? So it helps reduce that price. And it would put us more on par with some of the fees that actually are on something like Solana. Solana is actually, the way their floor possibly is actually is quite a bit lower. Again, now it still varies based off of network usage, and so it's still, during spikes. But the way Near is right now is that it is so low capacity. I mean, they were not even near using the actual capacity available on Near, and so it's just a really interesting thing. There's some negatives that they can come along with it. It makes it easier. It makes it cheaper to do different kinds of attacks to the network. But
Spam,
again,
is that an issue with it?
yes, he's like DDoS attacks and things like that, and try to attack the network. Again, Near has other protections in there that help reduce a lot of that stuff anyways, so it's not such a huge deal, but it's something to consider. But we won't get super technical here with it, but I do encourage, we'll put it in the show notes, I do encourage people to go and look at it. These are the important decisions that are being made now for long-term sustainability. Gas fees do help pay part of the protocol fees and things like that, and so to reduce that does make a difference. But again, Near has raised a lot of money. They don't really need the money. It's not an issue right now, and so I think it's a good thing to read through to see what kind of decisions are being made on the network, and just to understand what that looks like. And this is one, again, that could help provide some more liquidity, as well as encourage more users to come to the network if they were able to just remove that floor.
That's great, Joe. Thanks. Yeah, that's you're deep in there. That's those are like those big decisions that like aren't front of everyone's mind, but have major consequences. So
yeah, I think it's just good for people to start to understand too what kind of governance is actually happening on the network, and how people can be part of that as well.
Oh, great. Well, thanks for the update. We'll keep people posted. And Joe, this was I think so. We're at the tail end. This was our first Who Sharded.
Yes, yes, yeah. A couple bumps here and there, but we did it.
Yeah, I wonder if that'll ever be not funny to us. Like, I don't think. And here's the thing. So, if people are still listening at this point, the reason, like, so we put a poll up, like, should we try to rebrand the word sharded, right? Like, should that be an initiative that Near takes on? And it was like more people said no than yes.
Right.
And like, when I explain Near to non-crypto people, I have to like avoid that word, because the second I say, oh, it's like a it's sharding, they're like, what? And it's like, now I gotta like go on this tangent. I'm like, no, I get it. I know what you're thinking it sounds like. It's a funny word, but no, shard, like a sharding. Right. And even saying it, like I have to hit the D so hard. It's
right.
It's like I'm just down to double down on it. Let's just Who Sharded.
Yeah, let's just absolutely just go right into it.
Face it like, head on. You know what I mean?
Yep. Absolutely.
So Joe, I think this was fun, man. So and hopefully in the future we'll have partnerships and stuff like that. We're gonna be all around the ecosystem. So we're we'll have guests on occasionally. We don't know what's gonna happen.
Big things are coming. This is going to be a regular part of our release schedule.
Absolutely. All right, Joe. Well, great catching up, and excited to see where this all goes. And hopefully every week when we say the Near price, it's just a little bit higher.
Yeah. Yep.
All right, man. Have a good day.
All right. We'll see you.
Bye. Ready Layer 1 is provided for educational, informational, and entertainment purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. You should not make any decision, financial investment, trading, or otherwise based on any of the information presented in this podcast without undertaking independent due diligence and consultation with a professional broker or financial advisory.